Tomorrow, after the market closes, Nvidia reports fiscal first quarter 2027 earnings. Wall Street consensus, $78.8 billion in revenue. Earnings per share, $1.77. Nvidia's own guidance, midpoint, $78 billion. Meaning Wall Street expects a beat, but a modest one. And after 7 consecutive quarters of massive beats, a modest beat may not be enough. Here's the paradox. Nvidia's stock has rallied significantly this year. The company is valued at approximately $5.7 trillion. The AI trade has powered the Dow to 50,000, the S&P to 7,500, and made last week's Cerebras IPO surge 99% on day one. Every investor in America has some exposure to the AI narrative. But 3 variables threaten the story tomorrow, and none of them are about whether Nvidia beats the consensus number. Variable 1, China. Jensen Huang flew to Beijing with Trump. The U.S. approved 75,000 H2000 chips per customer. China hasn't allowed a single purchase. 0 chips shipped. Variable 2, margins. Nvidia's gross margins have been above 70% for 5 straight quarters. The Blackwell GPU ramp requires massive capital expenditure. Can margins hold? Variable 3, competition. Cerebras just went public and surged 99%. AMD and Intel are gaining an inference. The question isn't whether Nvidia dominates today. It's whether the market is already pricing in a future where competition erodes the monopoly. Here's every number that matters tomorrow, and the 3 the analysts aren't watching. Here's the sequence. January 2026. Nvidia reports fiscal Q4 2026 earnings of $61 billion, minus beating estimates by approximately 5%. Stock rallies. Guidance for Q1 FY27 is set at $78 billion, plus or minus 2%. February through March, the AI infrastructure build-out accelerates. Microsoft, Amazon, Google, and Meta collectively announce over $200 billion in data center capital expenditure for 20 and 26. Nvidia's GPUs are the dominant hardware. Order backlogs extend through 2027. April 2026. The Commerce Department approves H200 chip export licenses for 10 major Chinese tech companies, Alibaba, Tencent, ByteDance, JD.com, and others. Up to 75,000 chips per customer. At an estimated $25,000 to $30,000 per chip, the total addressable value is approximately $18 to $22 billion. Same month, Beijing issues informal guidance to Chinese companies: do not purchase. China's Ministry of Industry and Information Technology initiates a supply chain security review, a parallel process designed to reduce dependence on American chip technology. 0H200 chips are ordered. 0 shipped. May 14th. Jensen Huang joins Trump's delegation in Beijing. He meets with Chinese tech executives. He advocates for the chip sales. Nothing changes publicly. May 15th, Warsh takes over the Fed. Cisco reports AI-driven earnings that beat by 20%. Stock surges 13%. Cerebras debuts at 99% above IPO. The AI trade is in full euphoria mode. May 20th. Tomorrow, earnings after market close. Conference call at 5 p.m. Eastern. Translation: the consensus number is almost irrelevant. What matters is Jensen Huang's words about China, his margin guidance, and whether he acknowledges competition. The call determines the next move for a $5.7 trillion company and the entire AI trade. Subscribe. This earnings call affects every stock in your portfolio. Let me break down the 3 numbers everyone will watch and the 3 they won't. The 3 everyone watches. Number 1. Total revenue versus $78.8 billion consensus. A beat of $1 to $2 billion would be in line with recent quarters. A beat of $3 billion or more reignites the Nvidia Beats everything narrative. A miss, even a slight one, would be the first in 7 quarters and could trigger a 5 to 10% correction. Number 2, Q2 guidance. This is actually more important than Q1 results. Nvidia guided Q1 at 78 billion. If Q2 guidance comes in above 85 billion, the growth story accelerates. If it's below 82 billion, growth is decelerating, which at this valuation is the equivalent of bad news. Number 3, data center revenue as a percentage of total. In Q4, data center revenue was approximately 53 billion, 87% of total. If that share holds or increases, it confirms the AI infrastructure cycle is intact. If it decreases, the non-AI segments are dragging. Stay with me. The 3 numbers Wall Street isn't watching closely enough. Number 4, China revenue. In the most recent quarter, Nvidia disclosed that China accounted for approximately 10% of revenue, down from over 20% pre-export controls. If Jensen Huang says China revenue will be immaterial in Q1 because 0H200 chips shipped, the market absorbs it. If he says negotiations are progressing and orders are expected in Q2, the stock surges on a reopened $18 to $22 billion addressable market. Number 5, gross margin trajectory. Nvidia has maintained gross margins above 70% through a combination of monopoly pricing power and high-margin data center products. The Blackwell GPU ramp involves significant new manufacturing costs. If the earnings release shows margins declining to 67 or 68%, minus, still exceptional by any standard, analysts will model margin compression into forward estimates. That modeling reduces price targets even if revenue grows. Number 6, deferred revenue. This is the sleeper number. Deferred revenue represents payments Nvidia has received for products it hasn't yet delivered. If deferred revenue increases significantly, it means Nvidia is taking orders faster than it can deliver, a bullish signal for future quarters. If it flattens or declines, the order pipeline may be peaking. Translation: revenue beats are expected. What determines whether the stock goes up or down after earnings is everything around the revenue number, guidance, margins, China, and the pipeline. Here's the trap. For Nvidia, at $5.7 trillion in market capitalization, the company needs to demonstrate that revenue growth continues at a pace that justifies the valuation. 78 billion per quarter annualizes to over 300 billion. The company is valued at roughly 19 times annualized revenue. For comparison, Apple trades at approximately 8 times revenue, Microsoft at 12. Even by AI bubble standards, Nvidia's valuation requires perfection. If Nvidia beats and guides higher, the AI euphoria narrative holds, the Dow stays at 50,000, the S&P holds 7,500. Rate cut expectations don't matter as much because AI is the new engine. Warsh's first FOMC meeting becomes less consequential. If Nvidia misses or guides lower, the AI trade breaks. Cerebras, AMD, and every AI-adjacent stock corrects. The market loses its single strongest pillar. Warsh's Fed meeting suddenly becomes the only thing that matters. Every portfolio manager repositions. Stacy Rasgon of Bernstein Research has noted that Nvidia has become the most important single stock in global markets, and that a guidance miss of even 5% would erase more market capitalization than the entire value of most S&P 500 companies. Dan Ives of Wedbush Securities has argued that the China deadlock is a $75 billion overhang on Nvidia's multi-year revenue projections, and that every earnings call until the deadlock breaks will include the China question. Now here's the fair counterargument. Nvidia's dominance is real, not speculative. The company's CUDA software ecosystem creates switching costs that competitors cannot replicate in the near term. Data center demand is driven by contractual commitments from the largest technology companies on Earth. These aren't speculative orders. And even without China, The addressable market in the US, Europe, Japan, and Southeast Asia is sufficient to support continued growth. Cerebrus's 99% IPO surge actually validates the AI infrastructure thesis. More competition confirms the market is real, not that Nvidia is threatened. That argument has substance, but 19 times revenue requires zero mistakes, and zero mistakes across geopolitics, manufacturing, competition, and a new Fed chair is a high-wire act. See the pattern forming? Here's what Nvidia's earnings mean for people who don't own Nvidia stock. If you own an index fund, an S&P 500 ETF, a total market fund, a target date retirement fund, you own Nvidia. It's the largest or second largest holding in most index funds. A 5% move in Nvidia moves the index. Your 401 kilobits performance this quarter depends significantly on what Jensen Huang says tomorrow at 5 p.m. For AI companies, Nvidia's guidance determines the cost and availability of the GPUs that every AI startup, cloud provider, and enterprise needs. If Nvidia signals supply constraints or price increases, the entire AI ecosystem adjusts. If it signals abundant supply and stable pricing, the build-out accelerates. For energy costs, data centers powered by Nvidia GPUs consume enormous amounts of electricity. A single large-scale AI training run can consume the equivalent electricity of 10,000 homes for a month. The data center build-out is already straining power grids in Virginia, Texas, and the Midwest. If Nvidia's guidance signals accelerating demand, utility companies and grid operators must plan for even more capacity. Translation: Nvidia isn't just a chip company, it's the infrastructure layer of the AI economy. Its earnings call determines the pace of that economy's build-out, which affects your electricity bill, your retirement account, and the products built with AI. For Warsh's Fed specifically, the Nvidia result shapes the market environment heading into the June FOMC. For Nvidia drives the market higher, Warsh faces an overheating stock market alongside elevated inflation, the worst possible combination for new Fed chair. If Nvidia drives a correction, Warsh faces calls for rate cuts to support the market, but cutting with 3.8% inflation undermines credibility. Like if you're seeing how one company's quarterly report on a Tuesday evening determines the pressure on the Federal Reserve 4 weeks later. 3 scenarios for tomorrow's earnings call. Scenario A, beat and raise. Revenue above $80 billion. Q2 guidance above $85 billion. Margins hold above 70%. Jensen Huang signals progress on China. Stock gaps up 5 to 8% after hours. AI euphoria extends through June. Probability 40%. Nvidia has beat 7 consecutive quarters. The trend favors another beat. Scenario B, beat and flat guide. Revenue above $79 billion, but Q2 guidance in line or below $83 billion. Margins dip slightly. China described as uncertain. Stock is flat to down 2% as the sell the news pattern activates, market absorbs, but doesn't celebrate. Probability 35%. This is the priced-in scenario that creates the most confusion. Scenario C, miss or weak guide. Revenue below $78 billion or Q2 guidance below $80 billion. Margins compress. China described as not contributing meaningfully. Stock drops 8 to 12%. Correction cascades across AI and tech. The Dow gives back 50,000. Probability 25%, low but non-trivial given the China headwind and margin pressure. Active clocks. Tomorrow, May 20th. Nvidia FY27 Q1 earnings release after 4 p.m. Eastern. Conference call 5 p.m. Eastern. Jensen Huang's prepared remarks approximately 15 minutes. Q&A with analysts, approximately 45 minutes. The China question will be asked. The margin question will be asked. The competition question will be asked. What to listen for? Exact phrases that move the market. We expect China revenue to resume equal sign, bullish signal. Stock jumps. China remains uncertain, equal sign, neutral, already priced in. We are not including China in our guidance, equal sign, bearish. Stock drops. Gross margins will remain above 70%, equal sign, bullish. We expect modest margin compression during the Blackwell ramp, equal sign, cautious but acceptable. Margins will normalize to the mid-60s, equal sign correction, trigger. Demand exceeds supply across all product lines, equal sign, euphoria. We are beginning to see demand normalization, equal sign, the peak signal. June 17th, Warsh's first FOMC meeting, 28 days after Nvidia earnings. The market's reaction to Nvidia shapes the economic backdrop for Warsh's first rate decision. 3 things I'm tracking. 1. Jensen Huang's exact words on China, not the analyst interpretation. His words, they're carefully chosen and legally reviewed. 2. Deferred revenue. If it's above 20 billion, the pipeline is strong. Below 15 billion signals a demand plateau. 3. The after-hours trading range. If the stock moves more than 5% in either direction, the signal is clear. If it's flat, the market is confused, and confused markets create volatility for weeks. The numbers come out tomorrow. Follow the money. Follow the data. I'll be here with the breakdown.